Welcome to the Money Orchard Podcast. Investors have a problem. You don't want to lose money. You don't want to run out of money. You want your money to grow, and you want a future free from financial worry. There are thousands of complex investments. Most of them fail. It's extremely difficult to know what will succeed. That's why Dennis turned financial language into a story that will change how you invest. You will see the financial world as clear as an in-focus photograph. It turns investment information into real financial knowledge that works.
Hello and welcome to the Money Orchard with Dennis Zaderaka. Today we're going to be talking about getting fooled. Woohoo! Something I don't really appreciate a lot of times. Dennis, how are you?
I'm very good today.
All right. You sent me some notes ahead of time and we've been chit-chatting a little bit. And this is all about getting fooled. And I don't know if the audience is going to really like this topic right off the bat, but I think that once you get into it, they're going to understand exactly what you're talking about.
Okay.
How are we getting into this today?
Well, one of the things that I thought, okay, what's the most dangerous thing that we do as investors that really, I would say almost kills us. And the best way I came up with that is how we fool ourselves. I tried to think, okay, how do I illustrate that like we fool ourselves? I think I'm more handsome than I really am. I think I weigh less than I really do. And
oh, come on now. Nobody does that. I'm taller than I, so in other words, we have a perception of ourselves that, and a self-image of ourselves that maybe not be totally real. Mm-hmm.
But to get it, to get to kind of like in terms of where other people can understand this, I love magic tricks, magic acts, and I mean, I actually got to see Penn and Teller live over there in Las Vegas. Then obviously there's David Copperfield, and Chris Angel right now is probably the big name in terms of magic. And there's lots of other people, but here's the interesting thing about magic. We go into a place, we know they're going to do something that we know can't happen.
Mm-hmm.
So essentially what happens, they get us to see something that isn't real, really didn't happen. But at the same time, they're getting us to not see something that really did happen.
Mm-hmm. Mm-hmm.
And that's where all of a sudden I thought, that's kind of like investing. Sometimes we think, hey, I got this, the great idea. And then it turns out, whoops, it didn't work.
Yeah.
And honestly, when you go into these, it's a magic, I don't want to just, depreciate it as a magic trick, but let's just call it a magic trick. We go to the show knowing that they're going to fool us.
Mm-hmm.
And we're amazed that they did. And how do they do that?
Yeah.
And that's the carryover that I want to kind of, bring into the conversation about investing, is that it's the way our brains work.
Yeah. Well, Penn and Teller, I mean, they have a show called Fool Us, right? I mean, because they understand that there are other magicians out there. And so people come on this show and they compete and they give their best trick to try to fool Penn and Teller. Now, they know through their experience a ton of the tricks and a ton of the little things that people are probably doing on stage, but there are times they still get fooled. And I think that that's a joy for them because you see it on their face. They get really excited. I can't believe it, but you fooled us. And so, the person on stage wins a little prize or a trophy or something. But I find it interesting that even the magicians like to get fooled because they like to learn new things, and they know how the brain works as well. What other ways do our brains fool us, Dennis?
I don't know that I'm going to say it that fools us, but as I don't know. I think every kid, or at least lots of kids. I mean, I remember doing this, laying down in the summer and looking at the clouds, and you would see things in the clouds.
Mm-hmm. Mm-hmm.
So some of it is our brain wants to take what's out there and interpret what is this, and it's trying to understand. And so it projects this, there's a dog, or there's a cat, and so we see things in the clouds. Now there's, it's really not there, but our brains kind of interpret it that way. And so I would say the other way that happens with that is everyday life. I mean, I don't know about you, but have you ever driven down the road and you're talking to your wife, you're talking on the phone, or you're yelling at your kids, and you missed the turnoff that you've turned off for about 200 times because that's where you go home.
Uh-huh. So, well, that's so interesting that you bring that up, because so there's two things there with our brain. Number one, I think with the cloud example, I look at that as that's our desire to see something that's not necessarily there. Now we see a shape that's close to an elephant, but we can totally make it into an elephant because that's the desire that we have. Oh, look, I see an elephant and I can point out its tail, even though it may not exactly look like the tail, or the trunk is half the size of a regular trunk. There's this trunk. So that's our desire pushing that elephant or that rabbit or whatever on that cloud and saying, okay, that's what we want to see. And then the other thing is when you brought up the freeway, what I do more often is, and I've done this, I don't know how many times, is my brain is just mechanical. It's wired. I take an exit that I'm not supposed to take because, oh, that's the exit to go home. Well, I wasn't going home. I was actually going to go to the store, which is 2 exits down, but my brain just automatically made me take that exit because it knows what I normally do, right? It's a repetition, and I'm stuck in a rut with certain things. And so, yeah, I think it's interesting.
Yeah, look, I've done that because I moved from Chicago to Scottsdale, Arizona. So now I live here. And when we first moved here, we lived in one place, and now we live in a different place. Well, there's times I've gotten on the road and going to the old place.
Yeah, exactly.
Because I'm driving on automatic, and
Yep.
and so what I mean. I think the important thing to come out of this is that we really block out certain kinds of things when we're concentrating or we're doing something else.
Mm-hmm.
Let me give you one other example. And this isn't so much how your brain fools us, because it's trying to get to understand. Because if I can understand why my brain works the way it does, I can avoid making mistakes and problems. And this was in firearms training. And they were teaching us in terms of a hostile, threatening situation, what do you do? And what happens is your vision focuses down totally into tunnel vision, because your brain is like, this is a threat to me, it's dangerous, and your full attention is concentrated in this. Well, what they taught us is you have to learn to break that tunnel, because some guy on the other side might be his buddy. He's going to come up and hit you in the head with a brick. And so it's your brain, blocking all the other stimuli out to focus on what's really important. And that's how to, successful, is I can concentrate on something for a certain period of time. Well, while I'm concentrating, I'm blocking out other things.
Yeah. Yep.
And so the same thing is going to be true in investing, is we can focus on something so hard that we miss some of the other stuff that's important.
Yep. And we can be blindsided by something that is negative, or miss a positive opportunity because we just don't see it.
Exactly. Now, let me give you another example, and this is trying to understand how our brains work and sometimes how they don't work. But my younger daughter, he really has what they described as ADD. Mm-hmm. And she went through some testing. It was a mild form, but still had some issues in concentration in school. And this is where the psychologist said, ADD isn't lack of attention. The problem is it's attention to everything. And so we're sitting in the room talking to her. I mean, my daughter's there and the psychologist, and my daughter says, yeah, because you can't hear those lights, can you? I'm like, no. And she said, the clock over there is ticking. Can you hear that? I said, no. And so it's just, or let's use another example is people who live on a busy highway. You go over their house and it's like, how do you live here? They can't hear it. Mm-hmm. Because their brain has blocked it out. So the important thing is for us to understand is that, and I use the thing stressing is we can fool ourselves, and our brains can fool us, but it's really it's not so much trying to fool us, it's just the way it works. And we have to set up some ways to how do we realize this is how our brain works, and then how do I either take advantage of it, or how do I use this to make good decisions?
Yeah, absolutely. All right. And I know one thing that we talked about before the podcast is, for these podcasts, every time you're going to do something for the audience at the end of the podcast, and we're going to basically call it, What About Today? the concepts that you're going to be talking about at the end of the podcast, you're going to say, okay, how do we use this today on a day-to-day basis? So I just want to let the audience know about that. So stick around to the end, and Dennis is going to, as we go through this and he goes through what you can do and kind of how this applies to your life and investing in the orchard, just know that at the end of the podcast, he's going to be telling you what you can do right this minute today to start making those changes. All right, Dennis, where do we go from here?
Well, one of the things I want to kind of shift over to kind of take the magic trick, and then take it into Wall Street.
Mm-hmm.
Is one of the things, if you notice in these magic acts or magic tricks, they always have this story they're talking to you. Essentially what they're doing is they're keeping your brain engaged.
Mm-hmm.
So where your brain is focused on this, it doesn't see the other thing that they're doing.
Got it.
And that's just like when you're going back to, that's like when you're driving down the road and you're talking to your wife, yelling at your kids, or whatever you're doing,
Mm-hmm.
listen to the radio, that's how you can make the wrong turn there, because your brain is focused over here.
Got it.
So you miss something that you do all the time, except for now it's busy doing this. And so essentially with the magic, again, the magic act, they're kind of chatting you up to distract you. So it just showing we don't see everything that's going around us.
Mm-hmm.
And we're not paying attention to everything. And so it's going back to the investment world, is a lot of times the stories sound really good, like the .com bubble sounded so wonderful, and everybody knew that we're going to get rich doing it. We're going to get rich.
Mm-hmm.
And so everybody's this is something everybody knows. I mean, everybody knows it, except for it didn't turn out to be the right thing. Let's go back historically. I'll do this one. A long time ago, Krispy Kreme donut was just the best way to describe it. It was a fad stock. Oh, this was Elvis's donut. Actually, they're pretty darn good donuts. But
they are fantastic.
But it was interesting. You go to the store, you see them making the donuts. They're sliding down the line. That whole thing. Well, the stock at one point is $120 a share. And I remember reading one analyst, he said this stock would have to grow at 25% per year to justify, for 10 years, to justify the existing price. Now, he could see it. Why couldn't a whole bunch of other people can't see that? And the other part about it, he said, it's donuts. Lots of people can make donuts.
Mm-hmm.
This is a crazy price. Well, actually, they overbuilt and got a lot, tried to build too many stores and got a financial difficulty. Stock eventually went to like $1.
Oh, wow.
So again, there's an example of we think we see something and it's not there.
Yeah. Yeah.
So how do we keep ourselves from doing that? Let's do another way of going about it is the way to frame the question. I'm gonna pull this one on you. I have a stamp from the 1980s Olympic stamp. 1980, a stamp cost 15 cents to mail a letter.
Mm-hmm.
Do you know what it is today?
I think it's 52 cents, right?
55.
55. See,
It went up.
Yeah, apparently I was sleeping.
Now, here's a way, again, this is an example of like how do we perceive things? So my question to you would be this. Did inflation cause the price of stamps to go up? Or did the value of the dollar go down?
I'd say a little bit of both.
Well, let's do it this way. Which sounds worse?
Well, I think they're both worse in a way, but
No.
we don't want the dollar going down.
The worst is really the value of the dollar went down because that affects everything.
Yep, true. Yeah.
But we talk about inflation and the prices going up. What I just said is exactly the same thing in two different ways.
Mm-hmm.
There's no difference to what I said. It's just how I said it. And that's really the way you frame the question determines how you interpret it.
True.
So, hey, inflation goes up, blah, blah, it's sort of like that. But when you realize that the dollar has gone down 25, that's about 25% since 1980 in 40 years. That sounds terrible.
Yes.
So again, as I perceive it differently, I don't exactly know there's any way you can react to that, because it is what it is. But it makes the problem makes the problem a bigger problem. So if most people thought of it that way, maybe we'd get on our politicians to you gotta stop this stuff. Because basically inflation is caused by government spending money they don't have and borrowing money, and then it's just inflation.
Yeah. So how do we combat this? How do we combat the way our brains trick us? How do we take that look of reality? I'm looking at the cloud. Yeah, it's kind of in the shape of an elephant, but it's not an elephant. It's not that close.
Well, I'm going to give you an example from one investment company. There's a family of mutual funds, very good family, been around for 80 years, so they do a good job. And they have a system, kind of a process, realizing that people see things in a different way.
Mm-hmm.
So when they do research, when they do research or companies they want to buy, they go visit the companies. And I remember this is going back way long time ago. He basically says, we don't trade pieces of paper. We're looking to buy good businesses. Mm. And that's stuck with me. That's like 1980 when I heard that. They don't buy a stock or don't buy a company unless their analyst visits the company, and they visit regularly. But the other interesting thing they do is they send both their stock analyst and their bond analyst together. Because a stock analyst and a bond analyst, they have different perceptions about a company, how well the company's doing or how bad it might be doing. And so the result is they can, and maybe even the other thing is when you're in a meeting like that, while I'm talking, I might be missing some things. The other guy can observe what's going on and maybe read some body language. Is like, I know what his words said.
Yeah.
But something's wrong here. I don't know what it is, but let's dig deeper.
Got it.
And so there's value in having two people having a different perspective. Now, how do we keep, one is it's both a negative and a positive. One is I want to find out if there's something wrong, but the other thing is I want to make sure I'm not missing something that's good.
Mm-hmm.
So the bond analyst might say to the stock guys, like, look, I know the earnings are down and all this stuff, but these guys have very little debt. They're not spending a lot of money borrowing money. They've got a lot of cash. So I think they're going to be okay. We should invest here. Or the bond guy might say, I don't care how well the stock is doing. They got so much debt, it's going to kill them.
Mm-hmm.
So it's, again, trying to bring two different perspectives in terms of what they do. So together, looking at it, they see a clearer picture than they would be as if each guy went separately and did the same meeting.
And that goes back to the old saying, 2 brains are better than 1, right? I mean, that's how it boils down.
Or 2 sets of eyes or 3 sets of eyes.
Exactly.
Now, my experience, same thing. I went to Mayo Clinic and had to have a physical, and not more than that. I mean, they were trying to find out what was my illness. And after all the blood work and the X-rays and the what do we do, the EKGs and all the kind of tests they do, is we show up. This is like a couple days later, and in the doctor's office where there's 3 guys there. And they're all talking to each other, kind of like, what do you see? And they're looking at it from each one has a different perspective. And I found that fascinating, is that they coming from different perspectives to try to figure out what the heck's wrong with this guy. So again, it's even in the medical part is that's why you go get a second opinion sometimes when the doctor says, open heart surgery.
Yeah.
It's like, I think I'm going to get a second opinion, make sure this is what we need. So now how do we apply this investment wise? That's why that it's important to have an advisor, somebody that you trust. And I'd say 2 things. Sometimes somebody to tell you no, and sometimes somebody to point out, hey, this is a good idea. Go ahead and do it. Pull the trigger. I remember when my daughter wanted for her graduation gift, this like 2002, wanted an iPod. And I remember, I went and bought the thing, and I don't know, it's like $400. But the same thing is, I saw this stock is selling about, adjusted for the split, for about $5 a share. Well, now it's $265 a share.
Mm-hmm.
Now, I could see this. I went through my mind as with there people are going to play music on this all the time. It's not selling this iPod that's going to make the money. It's all the songs they're going to sell to put on the darn thing.
Mm-hmm.
So I could kind of see it, but because this is my field that I work in, I get distracted because I see lots of good investment ideas. I never did it. And that's where it would have been helpful to have somebody say, "Hey, you're right. Go get some."
Yeah, that is a good idea.
Now the other side would be true. Maybe I'm like all in. I mean, I got my tunnel vision. Oh, this is a wonderful thing, and we'll pick the .com one of your choice. These are great things, and we're gonna go public and make a lot of money. And then all of a sudden, it's like, whoops, it wasn't a good company. It was just a good idea.
Mm-hmm.
And so sometimes we need somebody to kind of put the brakes on too. So it's like one is to give you a little push, it's okay, and the other is to, hey, slow down. Did you think of this?
All right. That being said, Dennis, what about today? Right? That's our phrase that we're going to use in every podcast. What about today? What can somebody do today that'll change this?
Okay, I'm going to give you one guy, meaning me, my perspective, and what it's something that I'm seeing, and so it's just going to be information, and if it's even close to being right, this is going to be very important to kind of pay attention to. And so one of the things that I would talk about and mention is that the trend right now in investing is passive investing, and it's passive versus active.
Okay.
And this is like using indexes and ETFs and putting them all together in your mix of your portfolio and so on. And I'm beginning to be afraid that might be the trigger of the next market, call it adjustment, correction. I don't know that I would say it would be a crash, but I think it's going to make it go down because there's 2,000 ETFs. That's a lot of indexes.
Yeah, it is.
And we don't need 2,000, and there's not enough money probably in the world to invest in all the 2,000. So at some point, the wheels are going to come off the cart in some way. I don't know how. It's just I want to watch this area really, really, very closely.
Mm-hmm.
And to give you some factual numbers, the flow of the money to passive versus active is almost 8-to-1. And any times in the investment world that the money is flowing one direction and too heavy of a category or space, usually something bad happens. And that's really the trigger for me is this is a lot of money going there. Now, what's active versus passive? They're saying you can't beat the market, so you just, you index, blah, blah, all that kind of stuff. Now, there's people who are good, and I call them stock pickers, are good buyers of good companies. So it's saying, wait a minute, Warren Buffett does a really good job of being an active investor. Another, probably the grandfather, the dean or whatever, was John Templeton, incredible stock picker. He could look at a balance, he could look at an annual report, and there are reports in there, and he within about 30 seconds to 1 minute could say yes or no, is this a good company? And I actually had a friend of mine who actually worked for John, and told me some stories about him that were really funny. The other one is this is going back in the 80s and 90s, was Peter Lynch at Fidelity Magellan. Peter Lynch was a good stock picker. So it can be done. And then again, even now, there's certain mutual fund families that's what they do. They don't care about indexing. They don't care about asset allocation in that sense. They want to buy, good businesses, and they're going to be, call it stock pickers, if you will. But it's not so much stock picking, because that kind of misleads what you're doing. What we really are looking for is to try to buy a good business, and that is possible. I mean, it's one of my customers was an executive at a company where they grew by acquisition, so they could go out and say, we want to buy this company, we don't want to buy this company. So they would try to buy good businesses and put it together in a mix for the company. So I describe passive investing as kind of lazy investing. Don't have to research a stock, don't have to go think too hard. I just buy this index and put it in the portfolio, and then it does its magic, whatever. I'm not sure. I would say it's not that easy.
Yeah.
We have to think. We have to do some work. If you want a better than just average mushy return, it's going to take a little bit of work.
Yeah. I mean, the work is, I think, really you have to work with somebody who knows what they're doing. I mean, as I would not trust myself to be able to spend the time to research. I have other things that I have to do. I mean, I've got grandkids now. I've got, my own children that are just really starting out on their own. And I need to be able to be free to help them. Plus I've got aging parents. I'm in the sandwich generation. I've got aging parents. I help with them and their household. I don't have time to do all that research.
And so, but to do this, Eric, is what we need to do is we need to do some research, if you will, who out there is good.
Yeah.
And my daughter was one time when she was in college, complained about, it's boring or whatever. And I said, Nicole, you're not there to be entertained. This isn't Sesame Street anymore.
Yeah.
You're really in college to teach yourself. Then I asked the question, in high school, how many really good teachers did you have? And she thought a while. She said, maybe 2.
Yeah.
I said, the reason that is most of us are average. Not everybody makes the Hall of Fame, plays baseball or basketball. The exceptional people are not average; they're exceptional.
Yeah.
And so we can find who is the the exceptional person with the real talent and the real skill. And so that's part of the job is really to say I can and I need to look for that.
Yep.
Kind of drive the thing home is I like to play golf. I played baseball in high school and college. Now I was a good hitter, but I couldn't get a foul ball off the worst pitcher in the minor leagues. So now here's the other part. Tiger Woods is like the superstar for one of the great golfers of time. I would never take my $50,000 and play against Tiger Woods for money.
Yeah, no.
Not going to win. But the funny thing is a lot of times investors think they can beat the professionals.
Yep.
And when I'm talking to people, I say, look, Goldman Sachs is the Tiger Woods in their world. Mm-hmm. You're probably not going to beat them regularly.
Yeah. Yeah.
And so that's the same thing is to really seek out the talent that's what they're good at. I want to go back to the practical application is one of the things that I'm seeing, and it's just, again, one perception. It might be wrong. But at the same time, what I'm saying is like the thing to passive investments and ETFs and all that, and the bulk of the money flowing that one direction, that's starting to worry me. Mm-hmm. And it's an area that I think is worth paying attention to. Is like maybe do some of that, but maybe trying to find somebody in the other category as well.
Yeah.
So I have a combination of passive and active.
Mm-hmm. Dennis, if somebody's listening to this and they say, I want to further this conversation with Dennis, I'd like to hear more about his concerns. I'd like to hear more about his tips as far as what I can be doing. How do they reach out to you?
I could go to my website, which is my name, DennisZaderaka.com. Read a little bit about how I would say philosophy, how I work, what I believe. And that way you'd really find out, does this guy, does he match with me in terms of what I think and what I want to do? Then there's contact information in there through email. And the other thing I'd say is part of the podcast, if anybody has a question, it's like, hey, I have a question, email us and we'll deal with it in one of the podcasts.
Yeah, absolutely. That's great. Opening it up so we can deal with it on the podcast and you can hear your answer and people talk around the water cooler all the time. So I'm sure you've got questions. Email Dennis and we'll get that on the podcast. Dennis, thank you so much for your time today.
You're welcome.
All right. And thank you all for listening to the Money Orchard podcast with Dennis Zaderaka. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when Dennis comes out with a new podcast, it'll show up directly on your listening device. This makes it much easier to share these podcasts with your friends and family. Again, thanks for listening today. For everyone at the Money Orchard, this is Eric Johnson reminding you to live your best day every day. And we'll see you next time.
The Money Orchard symbolizes the portfolio, which is your money making money. When income from the orchard is the same as the income from your job, you are financially self-reliant. You have income sustainability because of your Money Orchard. Thank you for listening to the Money Orchard podcast. Click the subscribe button below to be notified when new episodes become available. TheMoneyOrchard.org.